an option, or trade in options, right? There are few things which you have to kind of remember, especially in strike selection and chart selection, and where do you trade it. So let me kind of explain that so that it becomes easier. So now all your analysis, your analysis will be in spot or underlying chart. So you will use the underlying chart to do the analysis. For example, if you are going to trade on Tata Motors, so you spot is Tata Motors equity. So you will open Tata Motors equity chart. That is where in this chart you will do your analysis. Pretty clear, right? The trade execution, trading, which means to buy or to sell, right? Whatever. So either if you are buying, you will buy put or call. Even selling also, either put or call. This one, these four activities, what you do, buying of a put or call, you will be doing that in options chart. Options chart. So there will be separate charts for every strike price. So 300, 310, 320, 330, so on and so forth. Separately for puts and separately for calls. So everyone will have a different chart. Different chart. So you will pick up that respective chart which you want to trade and put your buy and sell orders there. Buy or sell orders in that. So let me kind of show that in any of our trading platform. Make it easy. I'm going to show it to you in Zerodha. So for example, let us say okay, Reliance. I just have Reliance here. So Reliance today, if you notice, is trading at 2,162. This is what Reliance is currently trading at. And now if you want to trade, first you have to, your analysis is on equity. This is equity, Reliance on NSE. So if you want to analyze that, you click on the chart. The chart will kind of open up and you will see, okay, fine, what is the market doing? Oh, it is going up. Today it seems to have gone up by 0.77%. So it looks kind of little bullish, and it was kind of down in, at the start of it. Now it's kind of going up, it's all kind of good. Now you feel, okay, fine, now I can I can buy a call. So if you have to buy a call, first you have to kind of get the Reliance, that particular strike price. So you type Reliance and you want it for August month, because assuming now it is August month, and strike price. Currently it's at 2,162. So you want to kind of trade in, say, OTM, 2 OTM. So you will say 2,180 or something like that. 2180. So you got see 2180, both CE and PE. So you want to buy, so you will take CE, you will add that to your market towards. See here, now it is kind of come in. So CE was kind of, it has gone down today by currently it's at around 10 rupees premium. Now this also you can open the chart like this. See here, you can open the CE chart. You will see here. Or now you say, fine, now from here it can kind of go up. So you simply go here and buy this one. So the 250 is the quantity, and then you can kind of choose whichever kind of if you want to buy at the market or limit order or SLM order, as the case may be, and go and execute your buy. So here, very important to understand that this is the underlying. See, Reliance, this is the underlying spot. Then you have the CE, various CE charts. So if you simply type here Reliance August, you see so many strikes you get, both CE and PE, all of that you get it, right? If you just type PE, so you get all the PEs, whatever strike you want, you can kind of pick up that strike, and then the accordingly 2180 we had picked up, so I'll pick up even PE as well. So whichever you want to do, PE or CE, accordingly you will have to kind of trade. So this is very, very important. So trading happens on the CE and PE chart, but your reference is always the underlying chart. So you always will be looking at least 2 charts to kind of trade in options. So this can kind of look complex, but only initially. Once you kind of get used to it, it's kind of goes very, very simple and easy. So that's a very, very important understanding. So with that understanding, now let's kind of jump on to understanding the buying systems. Here is the first system. So specifically on the buying, what we have done is, you already have understood and learned the intraday trading systems, 3 or 4 of intraday trading systems, which either you can trade in cash or in futures. And I've advised you to trade in futures if you can afford to trade in. Now the same strategies you can also trade in options. That's the beauty. Now we've already got that, so we'll kind of look at a slight modification here, slight modifications, not so much, very, very minor. I'll kind of quickly run through that, but all those strategies you can kind of trade. Especially we are given 4, in that 3 definitely you can trade. So I'm going to repeat that 3 here. The first one, the momentum with RSI. I'm sure you all remember this already. If you have not gone there and directly come here, just kind of focus this here. What are the ingredients? You need technical chart, candlesticks, RSI, and 15 minutes and different time frames of RSI. And a trading time frame is 15 minutes or 60 minutes. That's what we're going to do. It's a buying. All of these are buying options. So you will only buy, whether it is PE or CE, but you will only buy. Very important. And strike price. I've already given the rule. If it is first week, which strike price, second week, which strike price, third week and fourth week, different types strike prices you will have to pick from. This is all with reference to spot. If spot is like Reliance, we saw it was 2160, so I bought 2 out, 2180, whatever, something like that, right? So now execution rules. What are the execution rules? The basic rules still remain same. Go long. Of the 3 time frame, the RSI in the 2 time frame should be above 60 if it is above 60, and in the lowest time frame if it is at 40 and rising above with a bullish candle, that is a buy. Same thing. Now here what you will do is, instead of buying the underlying, you will open simultaneously the CE. Here what are you buying? You have to buy call. Because the underlying you are thinking about taking it up, so it is going up. So long, you go long on call. So here you will buy a call. Shorting will be, if it is going down, that means in underlying you will short. Here you will not sell call, no, but you will buy a put. So if buying a put means underlying going down, we already explained that. Buying a call means underlying go up. So if 40 support, if the higher time frames is above 60 and your trading time frame is at 40 and a bullish candle emerges on the spot exactly at that time, when the next candle cuts it, simply open the CE chart and buy. Now it is reverse happening. Higher time frame is below 40 and trading time frame is resisting at 60 and coming down, and there is a bearish candle below that. When the market goes in this spot, simply go and buy a put, right? So that is what it is about. So I'll again exit. If you make a profit of 20% or before the end of the day, exit here. That is what it is. All your analysis and trade identification is an underlying chart. The buying, the trade has to be either on a call or a put, as the case may be. I've already explained that. Risk management rule, slightly different here. Initial stop loss will be 40% of the premium. 40%. So now, for example, now we saw Reliance. If you notice here, Reliance premium is at, say now, PE is at 30 rupees, C is at 9 rupee 50 paisa. So on this value, you will calculate 40%, and that is your stop loss. You may be wondering, oh my God, 40% is too much. How can we do? This is not on underlying. This is on premium. Premiums will be very low. So for a 9 rupees or a 10 rupees, 40% is only 4 rupees. You lose only 4 rupees if things go wrong. Of course, 4 rupees into 250 here, which is the quantity, which is about 1000 rupees is your loss. If it fits into your this thing, you can kind of trade it, something like that, right? And then target is between 30 to 50%, 30 to 50%. That's your target. But at the end of the day, even if you are just about 10 to 15% or 20%, take and go. But if the market is still trending and midday, and if it reaches 30% and above, think about booking your profit, take the money. Don't simply wait, because this is option. Options changes very soon and quick because of the effect of Greeks. So we will not discuss that, but 30 to 50%, take that money and kind of exit. As simple as that. Once you are in the money, you can also trail candle by candle in the options chart. In the options chart, you can trail candle by candle. So that is the first system, what we already had spoken there. So we are kind of once again reiterating that first system, but everything trading on options chart. Hope you kind of got the first system. If you're kind of getting that first system and all thinking about it, type in the comment, ready to trade, ready to trade. Come in the next video.